Hi guys, welcome to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita.
And I'm Yatin.
Well, Yatin, as I said, there has been a spring in the steps for the market this April. Of course, it's the spring season, and we saw, very good gains coming in for the market in the April series. In fact, we've ended the April series around that 22,600 mark. Both the Sensex and Nifty Yatin staged a good rebound from intraday lows. Despite the fact that there was a fair bit of volatility, India VIX also jumped over 8%. Expiry day volatility was at play, but despite that, we staged a very good comeback with the Sensex rebounding almost 700 points from the day's low. The Nifty Bank Index also, Yatin, held out despite, what happened with Kotak Bank, where we saw the stock plunging by over 10%. Axis Bank, of course, came in and, numbers were pretty good. There was a margin surprise there. And that provided a cushion to Nifty Bank Index, which also, by the way, is above that 48,000. In fact, I think it's very close to that 48,500 mark, Yatin. Broader markets were also extending their gains. Nifty PSU Bank Index hit a fresh all-time high. SBI up 5% today, Yatin, among the top Nifty gainers. Aside of that, Axis Bank, it has become the fourth largest lender, overtaking Kotak Bank in market cap. That was among the top gainers. So was Dr. Reddy's on its JV with Nestle. You have JSW Steel extending gains, Hero, Nestle on the back of good numbers among top Nifty gainers. On the losing end, of course, Kotak Bank, after RBI curbs, that stock saw, its worst intraday fall in 4 years. Aside of that, HUL, of course, volumes came in at 2% and, numbers were fairly in line but subdued as was being expected. SBI Life tightened Bajaj Finance, which reports its numbers tomorrow. Under pressure today. But Yatin, of course, lots of companies or stocks that were reacting to the results today in the broad end of the market.
Absolutely, reacting to results, conference calls and whatnot. But let's talk about the markets. Clearly a strong day. Advance decline ratio also quite good. Of course, there was intraday volatility, and you need to mention Nandita idea.
Of course,
there was some technical glitch on the National Stock Exchange, but if you look at the stock of Vodafone Idea, pre-open opened 10% lower, around 11 rupees 80 paisa, and ended at the day's high nearly at 14 rupees. So if you were an FPO investor, probably you made more than 25% on day one. Clearly indicating that market is hoping a lot of reforms in the telecom sector, as well as a tariff hike is what the market is currently factoring in. Any which ways, that was about Vodafone Idea, good listing. As far as stocks are concerned, MCX top F&O gainer up 9%, and we had a conference call in which the guidance of the management was quite strong, post which the stock moved higher. Bharat Forge, and we'll talk about it in detail, but that stock also moving 7%. First Source Solution, Inox Wind, Mazgaon Dock, Aditya Birla Capital, Idea, Axis Bank, all of these stocks clearly on tear. In fact, Axis Bank post the results moved nearly 6% in trade. What did not do well, obviously Kotak Bank, top F&O loser, 10% down on RBI action. But we also had Dalmia Bharat, which guided in the management conference call that the price hike in the cement space are still not sustainable. Post with the stock was down 10%. Indian Hotels, after reporting a quarterly EBITDA miss, was down 5%. Metropolis, Thermax, Lodha were the other stocks wherein we saw some bit of profit taking.
Well, lots of results reactions coming in and clearly reflecting in the stock prices as well. But Yatin, of course, we can't not talk about Kotak Bank, top Nifty loser, worst intraday fall since, March 23, 2020. Of course, the RBI curbs have played spoil sport here. The RBI has barred the bank from opening or onboarding new customers, as well as issuing new credit cards as well. Of course, a whole host of research reports have also come out on Kotak Bank as to what, investors should be doing with this particular counter. Most of the brokerages have maintained their calls on the stock. They've held on to their neutral and overweight stance, because most of them believe that it's the timing of the lifting of the ban that would decide the future course. Because if it's only for 4 to 5 months, perhaps the impact won't be that much. But if it sustains for 1 year, that is when the bank will feel the pinch rather. That's what most brokerages are saying. Of course, the message from RBI is pretty clear. They're not going to compromise on digital infrastructure and data security as well. HDFC Bank, remember, had met a similar fate, right? They had been asked by RBI to not issue fresh credit cards, and HDFC Bank took somewhere around 9 to 15 months to resolve the issue.
Correct.
So here we'll have to see how much time Kotak Bank takes to get this issue out, and that's something that would decide the future course. But let's take a look quickly as to what the brokerages are saying. Macquarie has a neutral target. It has a target neutral rating. I beg your pardon. Target price at 1860 rupees per share. It says that it could be a significant setback given the fact that lots of saving accounts are opened via the 811 platform. That's a digital platform of Kotak, and majority of unsecured products are also done digitally. So, bulk of FDs and recurring deposits are sourced digitally. So, these, this could be a significant setback according to Macquarie. They've also pointed out that fewer branch openings, also could, be one factor or an issue that needs to be watched, because, they have opened just about 350 branches in the last 4 years. This is a similar point that is being pointed out by Citi also. They've said that the pace of branch expansion also needs to accelerate when it comes to Kotak Bank. They have also got a neutral rating, target price at 2040. CLSA has maintained its outperform rating, target price at 2100. They see a modest impact on profit unless the ban stays for long, which is what I was saying as to how quickly they resolve this issue. But aside of that, they say that digital platform, the contribution coming in from digital platform to total savings deposits is just about 8%, and credit card segment contributes only 4% to the loan book. So according to CLSA, not that great an impact right now, but we'll see how fast this issue gets resolved. Jefferies also has a hold rating, target price cut to 1970 from 2050. But Yatin, of course, we'll have to see how Kotak Bank tackles this issue going forward, and then of course we'll see how things pan out. But for today, of course, knee-jerk reaction, 10 to 12% cut on the bank.
Clearly, a big reaction on the stock price, and a blue chip company suffering, the wrath of the regulator for non-compliance. But, on the good note, we have Bharat Forge, which did extremely well in trade today. We had a Bank of America Merrill Lynch report on a double upgrade, wherein, we saw a huge rally in the stocks of Bharat Forge. Now, if you look at Bharat Forge today, we have seen a strong 10% intraday move, settling around 7-8%. The target by BofA on Bank of America, which is on Bharat Forge, is raised from a level of 1000 rupees to 1450. So, this double upgrade comes in with a huge target price increase. BofA believes that the upcycle that we are witnessing, especially in the electrical vehicle space as well as defense business, could benefit Bharat Forge and could be a growth lever moving ahead. They also believe that the truck segment, which is the Class 8 truck orders, especially in the US markets, are not slowing yet. And there is nothing to worry as such for investors when it comes to the Class 8 truck orders. When it comes to the new wheels of growth, they are accelerating, and resilient business model warrants premium valuations, because of which today the stocks has not only moved but also on huge volumes. There was price action in Bharat Forge, and since start of the day it opened 3-4% gap up and ended almost 7-8% higher. So with all credit to BofA, after this report, a lot of institutional activity was seen in the stock today.
Of course, Bharat Forge among one of the top Nifty 500 gainers today, Yatin, among the top 5 rather on the Nifty 500 index. But let's take a look at Indian Hotels. That stock, despite its best quarterly performance ever, this stock ended lower by about 5% or thereabouts. Couldn't really check into gains after good numbers, given the fact that brokerages have maintained that the kind of upside we have seen over the last 3 months, 27% or so, is unwarranted. They also expect that there could be some renovations that Indian Hotels will be undertaking for its Taj properties across cities, which would lead to some room closures as well for a bit, and that could impact the average revenue rate as well. But if you look at what Morgan Stanley has to say, it has an overweight rating, target price at 529 rupees a share. It says that Q4 EBITDA missed Bloomberg estimates by somewhere around 5 to 6%. And international subsidiaries played spoilsport here, because domestically, the brands did very well, but it's the US business that was lagging, and that's what took a toll on the stock price as well, and outlook shared by brokerages. But management has told CNBC that they are taking all the steps necessary to restore the US business to pre-COVID levels. Of course, aside of that, what Morgan Stanley is saying is that the multi-brand portfolio as well as strong free cash flow is something that keeps them overweight on the stock. Elara, on the other hand, has downgraded the stock to sell. It sees a 15% downside on the stock. It says that, of course, Q4 numbers were in line, led by a 430 basis point improvement in occupancy as well as 3.5% increase in the average room rates. It also maintains that the company may deliver healthy revenue growth over FY25 as it plans to also open 25 hotels in the coming fiscal, in fact in the current fiscal FY25. The company will of course be investing 25,000 crore rupees over assets and renovation that I was mentioning, and digital initiatives as well. And of course, occupancy, as I mentioned earlier as well, it will get impacted by the renovation of Taj properties, and that could of course lead to some bit of pain on the average room rates going forward. But Elara has also pared its FY25 EBITDA and PAT estimate by 7% each, and they have mentioned that of course the run-up that the stock has seen over the past 3 months is unwarranted. But if you look at the stock performance, Yatin, over the last 1 year, it has gained 70%.
Absolutely, strong momentum there. But I think the domestic business was fine. The only culprit being the international business. Probably this will be an opportunity, hopefully, for long-term investors. But Nandita, we are just running short of time. A lot of earnings, and we have a live of the IT giant management. We'll dip into that. But with that, it's a wrap for all of you. Tomorrow, Nandita will join us in the morning with all the market, mantras, all the market action which is happening, especially during the results season.
And it's Friday, of course, so we will be in a good Friday mood as well. Hopefully, the market will be as well. But of course, thanks a lot for tuning in. Stay tuned for all your other news and updates.